Well, we're back. I'll get you updated on our current ag commodity trade. I'm Marlon Bowling with you. And as we watch this corn market, let me bring this up here. Our quotes are provided by Bar Chart. And on the big screen, we'll go to the December contract. And it's now 3.25 higher. We're firming up as we go, the way it seems. Currently, that December contract is now trading at 489.25. That's only 2 ticks from our high of the day. However, the entire range is only about 7 cents wide, so there is that. But generally, about 3 cents higher across the board. Soybeans, they can't quite keep up. November now down 6 3/4 at 12.66 1/4. In January down 6 3/4. We're at 12.85.5 as it stands right now. In both cases, they're about 6 cents off of their overnight high. Now, when you get to the wheat market, whole different story. On wheat, well, for a change, it's taking a leadership role. Look at them go. December Chicago wheat, 12.5 higher at 572.5 right now. How about that? That's a penny and a half from our high of the day. In Kansas City wheat, wow, look at December, 16.25 higher at 682.75. Within 2 cents of its high of the day. Now, in the spring wheat market in Minneapolis, December is 14.75 higher at 726.5. That is on the high of the day as we look at it here. And December cotton is now 28 points higher at 87.29 per pound after it had been a little bit weaker in the overnight trade. Well, to explain this, hopefully, let's bring in Ted Seifried of Zaner Ag Hedge. He's, of course, based in Chicago. All right, Ted, so what are we witnessing here? Why is the wheat market showing some strength and really flexing its muscle today when the corn and soybeans can't?
Yeah, corn's trying to come along. Beans obviously being the stick in the mud. But I think for wheat, you have some good old-fashioned, back to the Russia-Ukraine news. You had rumors yesterday that Russia was thinking about or willing to possibly talk about entering back into the grain deal. But then you had some pretty big attacks and explosions in northern Ukraine overnight. So that notion might be kind of put to rest, at least for now. So we finding some of that strength that it kind of lost yesterday. Aside from that, export sales were okay. We continue to watch these outside markets, which are really flighty. Last week it was all one direction, downside for the stocks, upside for the U.S. dollar. Just in the last couple of days, we had big sell-off in crude oil. Stocks have been on both sides of the unchanged in the last couple of days. The dollar has as well. So we're looking for direction in the overall economy, the overall sentiment, what that dollar is going to continue to do, although it does still look like it has more upside. But we've got very mixed markets as far as grains are concerned and trying to find that overall direction. Corn is sort of on the verge of a breakout if it can manage to close about 4 cents higher. But we've been trying this for the last 4 days and just unable to do it. So I don't know. We'll see.
Well, in my travels the last few days, I was mentioning earlier, and you might be interested in this too. Maybe you can confirm that. But boy, the most activity and the most rapid progress I witnessed driving through the countryside just seemed to be right along I-80. And it seemed like most of it was right around Champaign, Mattoon and Effingham and that area there. They were just going wild with harvest activity there. It was starting to pick up around Indianapolis there, but I mentioned earlier that it seemed like it was mainly soybean harvest there. But there was a lot of corn coming out of the field in the central part of Illinois, and I wondered if that's damaging the basis at all.
Yeah, and I took a very similar route as that a little less than a week ago to do market to market. And there was nothing going on because we had gotten some pretty decent rains. And now we're getting rains again here in the last, 12 hours. So, yeah, I think those guys just really trying to get everything they can get out as soon as they can, because now we'll probably shut down for a couple more days. Sure. Marlon, it is harvest time. It is going to affect basis. I'll go back to the last quarterly grain stocks number that we saw with 19% increase on farm storage and corn, 14% year over year higher in soybeans. I think that's going to weigh on basis for a little while. So I'm a little reluctant to say that harvest lows are coming, early this year. A lot of people want to say harvest lows are generally in September. That's usually because we move a lot of the old crop cash before in order to make room for the new crop coming in. We didn't really do that this year. So now we're going to have to be selling old crop or selling new off the combine. I think that harvest pressure could last a little bit longer, especially on the basis side of things. Futures might be able to put in a low a little bit sooner than basis. But again, I think that lingers a little bit. A lot of it because of the on-farm storage.
You know, you made that comment last Friday on my evening commodity wrap show, and I thought that was very intriguing, and it still holds true. It's really fascinating that there's that much being held on the farm right now. That could be a big factor yet moving forward. Ted, we're going to take a break. I'll come back and I'll talk with you about livestock after this. On to the livestock we go. Let's venture into the world of live cattle futures, shall we? And on the live cattle, we have December now 65 lower. Last trade, 185.37. That would be exactly half a dollar off of our earlier high this morning. February now 80 lower at 189.57, so they can't seem to get their feet underneath them yet today. On the feeders, the nearbys are trying. You have November feeders 30 higher at 250.72. But beyond that, everything is about 50 to 65 cents lower, so it's really struggling mainly on the deferreds. On lean hogs today, well, they're saying the heck with that. We're going higher. December is up $2.20 at 71.37. And that would be 40 cents from our high of the day. February up 207 at 75.17. So lean hogs kind of in their own little world apparently today, Ted. How come?
Well, we found some pretty good support after being really rather oversold. But I'm going to say, I've said this a couple times. I really think if we are very scared that we're going into a recession or a time frame where we're going to slow down and consumers are going to curb their spending, well, I think pork is a really interesting value proposition. The cheaper cut of meat, the alternative protein. I like that. I think your speculative guys are starting to catch wind of that idea. Like, hey, let's look at what the cheaper substitutes are for some of these high-priced ticket items that people are spending on in the grocery store. So that's part of what I think it is. I think a lot of it's been technical in nature. I think it's a good thing that the live cattle are able to kind of tread water here, and even front month feeders positive on the day after all the weakness that we've seen recently. In light of, again, stock market tried to go higher, it's now down again. We're very sensitive to that. We're very sensitive on the demand side of the equation. I'd say for all of the livestock right now, but for different reasons.
Yeah, you mentioned the Dow. Let's take a quick look at that here. The Dow Jones Industrial Average Futures currently down 121 points. Like you say, last time we looked, it was down about 50, and now they've expanded on that. All the way down to 33,205 on the Dow right now. The U.S. dollar index is down 170 points, so too. It's at 106.360. Ted, great information. Thank you, sir, very much. Always a pleasure. Ted Seifried of Zaner Ag Hedge with us here on a Thursday morning.